Raoul Pal thinks AI will trigger the biggest crypto boom in history. What if the next crypto boom doesn't come from Bitcoin hype or retail investors rushing in, but from machines? Not people. Not institutions. Artificial intelligence. And according to Raoul Pal, this shift isn't just another cycle. It could be the biggest wealth acceleration event in modern history. Bigger than the internet. Bigger than mobile. Bigger than anything crypto has seen before. But here's the real question. Why would AI, something built to think and learn, suddenly ignite an explosion in digital assets? And more importantly, are we already too late to see it coming? There's a quiet transformation happening right now. While most people are distracted by price charts and headlines, two powerful technologies are beginning to merge: artificial intelligence and blockchain. Individually, they've already changed the world. Together, they could reshape how value itself is created, stored, and transferred. Raoul Pal believes this convergence is not just important, it's inevitable. And if he's right, it raises a deeper question. Is crypto about to evolve from a speculative asset into the core infrastructure of an AI-driven economy? Because if that's true, then what we've seen so far may have only been the warm-up. To understand this moment, you have to step back. Crypto didn't start as a trillion-dollar market. It started as an experiment. When Bitcoin launched in 2009, it wasn't seen as the future of finance. It was seen as a curiosity. A digital alternative to money, created in response to a broken system. Over time, that idea expanded. Ethereum introduced smart contracts. New blockchains promised faster speeds, lower costs, and more scalability. And suddenly, crypto wasn't just money. It was infrastructure. A programmable financial system. But something was missing. For years, crypto has struggled with one core problem: real-world adoption. Yes, people trade it. Yes, institutions invest in it. But outside of finance, its use cases have been limited. Until now. Because AI doesn't just use data. It depends on it. And more importantly, it needs a way to verify it, own it, and transact with it. That's where things start to change. Here's the first breakthrough idea. AI and crypto solve each other's biggest problems. AI is incredibly powerful. But it has trust issues. It can generate content, make decisions, and automate systems, but it struggles with verification. How do you know the data is real? How do you prove ownership? How do you prevent manipulation? Crypto answers those questions. Blockchain creates a transparent, immutable record. A system where data can be verified without relying on a central authority. Now flip it. Crypto has infrastructure, but it lacks intelligent automation. That's where AI comes in. AI can optimize networks, manage transactions, even operate decentralized systems without human intervention. And when you combine the two, you don't just get better technology. You get entirely new systems. Autonomous economies. Machines that transact with other machines. Digital agents that earn, spend, and invest. And suddenly, crypto isn't just an asset class anymore. It becomes the foundation of a machine-driven economy. But here's where things get interesting. This shift may not be driven by humans at all. Think about that. For the first time in history, economic activity could be dominated by non-human participants. AI agents that operate 24/7. They don't sleep. They don't panic. They don't hesitate. They execute. If these agents need to transact, they can't use traditional banking systems. Banks are slow. They're permissioned. They require identity, compliance, and human oversight. AI doesn't fit into that model. But crypto does. Permissionless. Global. Instant. And programmable. That means the next wave of demand for crypto may not come from retail investors, or even institutions, but from AI systems themselves. Buying data. Paying for compute power. Transacting across decentralized networks. And if that happens at scale, we're not talking about millions of users. We're talking about billions of autonomous transactions every single day. Which raises a new question. What happens to crypto prices when demand no longer depends on human psychology, but on machine efficiency? Raoul Pal's thesis centers on one core idea: exponential growth. AI is growing exponentially. Crypto networks are growing exponentially. And when two exponential technologies collide, the result isn't linear. It's explosive. Here's how it plays out. AI increases productivity. It reduces costs. It accelerates innovation. That creates more wealth, more capital, more investment. Historically, when new wealth is created, it flows into the fastest growing assets. Right now, that's crypto. But there's another layer. AI doesn't just create wealth. It redistributes how value is generated. It shifts power away from centralized systems toward decentralized ones. And that aligns perfectly with crypto's core philosophy. Decentralization. Ownership. Transparency. Now imagine a world where AI agents run businesses. Smart contracts handle agreements. Payments are instant and borderless. And everything is recorded on-chain. That's not a distant future. That's a system being built right now. And according to Raoul Pal, we're still early. Not early like 2013. Not even early like 2017. Early like the early internet. When most people didn't yet understand what was coming. But those who did changed everything. Because once adoption reaches a tipping point, growth doesn't just continue. It accelerates. Faster than most people expect. And longer than most people can imagine. But let's not pretend this is guaranteed. There are real risks. And ignoring them would be a mistake. First, regulation. Governments are still trying to understand both AI and crypto. And when two disruptive technologies combine, regulation often follows. That could slow adoption. Or reshape how these systems operate. Second, technological limitations. AI is powerful, but it's not perfect. It can hallucinate. It can fail. And if autonomous systems are handling financial transactions, errors could have serious consequences. Third, market cycles. Crypto is still volatile. Even with strong fundamentals, prices don't move in straight lines. There will be crashes, corrections, moments of doubt, and finally, the biggest risk of all: overhype. Every cycle has a narrative. And sometimes, the narrative gets ahead of reality. AI and crypto may be transformative, but timing matters. Adoption takes time. Infrastructure takes time. And not every project will survive. So, while the upside is massive, so is the uncertainty. Which brings us to the bigger picture. What we're witnessing isn't just a trend. It's a transition. A shift from human-driven systems to machine-augmented economies. From centralized control to decentralized networks. From slow, manual processes to instant, autonomous execution. And somewhere in the middle of that transformation, crypto sits as the bridge. The layer that connects intelligence to value. Raoul Pal isn't just predicting another bull run. He's describing a structural change. One that could redefine how wealth is created. And who, or what, creates it. Because in the future he sees it won't just be people participating in the economy. It will be machines. And if that future unfolds the way he believes, then the biggest crypto boom in history won't be driven by hype. It will be driven by necessity. The kind that doesn't ask for permission. The kind that doesn't wait. The kind that changes everything. The only question left is, when it happens, will you recognize it? Or will it already be too late? Thank you and subscribe now.